Hey, it's Greg Harrelson here with my co-pilot and partner Abe Safa from Myrtle Beach Real Estate TV. Of course, we are both, real estate agents with Century 21, the Harrelson Group, and just wanted to talk about a few things. Number one, the beach is now open, so we want to talk about what does that mean for the real estate market that our city is starting to open back up. Another thing that's interesting this week is banks really are making a lot of moves right now where they seem to be tightening up on what kind of loans they'll give, credit score requirements and whatnot. And then last before and not least, but before we get off of this broadcast, we want to share with you the most recent numbers and maybe break down and give you some thoughts as to what are the trends, where's the market going, and of course where we are now. So Abe, thanks for joining with me again on Myrtle Beach Real Estate TV.
Absolutely.
Yeah, so the beaches are opening up. Any thoughts? What does that mean to us? More importantly, what does that mean to our consumers right now? Maybe people that are thinking about buying, or even people that own property that are thinking about selling. What kind of impact is this going to have in the short term?
Yes, I mean, what we're seeing right now, it actually, well, luckily, the market never really slowed down that much for us relative to the rest of the country. We've actually had some pretty good activity, but there's no doubt it's been slower than what a normal typical spring is, right?
Sure.
But now that we've seen the beaches open up since last week, we've really seen a spike in number of physical showings. We can even see it in traffic. Driving around town, you can see more and more people are in town. The hotels have opened up, condos have opened up. Now they're not able to take any bookings currently up until from May 15th and on is when they can start taking bookings. But right. they are open, and the biggest thing is owners of condos are allowed to actually come into town and stay in their properties. So I think that's where the biggest influx of traffic has been from. And with the restaurants opening, we're starting to see a little, gradual growth of tourists coming into town and in the market. Yeah, so we're definitely seeing a spike in activity in physical showings.
Yeah. So as we start to open up as a city, I think it's logical that we could have made these assumptions, and now we're seeing it as we open up. There are more showings on properties right now. So I just had a meeting with multiple agents that are working with buyers right now throughout our offices, and they're all telling me, like you just said, increased showings, but even more important, there seems to be this pent-up demand from people from other states that are like, hey, we want to come down. We're going to come down in June. We know you're open up. We're going to come down at the third week of May. In other words, they're giving us some sort of dates. They're starting to book again, and they seem to be, on their way down. So when we say, what does that mean for property owners? What that means is, during the last couple of weeks, 45 days, there's been supply on the market, meaning inventory on the market, but less demand for that supply. Now, that demand is not less because fewer people wanted to buy, it's because fewer people were traveling. So as people get more and more comfortable traveling, then we should see demand kind of pick up. And again, we're seeing that the number of phone calls that we're getting from buyers saying, hey, I want to look at property when I come down in a few weeks, those numbers have gone up. Current showings are gone up. Website traffic has gone up. So this can mean some good things. But I think we talked about this in the last broadcast, Abe. We do have a supply issue. So right now, one of our biggest challenges is we have buyers and we don't have enough sellers. And so we have buyers, we're showing property all day, multiple properties, to multiple buyers, but there's just not enough supply for them to choose of. Meaning in some buildings, there used to be 10 units they could look at. Now there's 2 units they can look at. Or a residential community where there were 10 homes for sale, now there's 3 homes for sale. And even with the new construction site, they're trying to get rid of their standing inventory so fast that even their inventory is down, or their inventory that they can sell is a raw lot and then build a house, but that's going to take 8 or 9 months to complete. So, these are some of the challenges. Are you hearing some similar things like that?
Yeah, absolutely. And when we look at the numbers, we'll see it'll be reflective in there, and you can see the difference between the new construction and the resale. But resale homes right now significantly down. The very low supply as far as inventory per month, and we'll see that when we dive into the numbers. But yeah, significant.
Yeah.
But the exciting thing is, I mean, there's all along we've had plenty of activity. People looking to stuff virtually. A lot of people saving properties that they liked. And
Yep.
now, as you said, we're starting to see those people that have been saving property the last few weeks are starting to trickle into town and actually want to physically look at properties.
Yeah.
So that's exciting news for homeowners, condo owners as well.
Yeah, if you're thinking about selling, I mean, now's a good time. It's a seller's market. There's no doubt.
No
I
question.
don't have a crystal ball to tell you what it's going to be in a month from now, 2 months from now, but I can tell you right now that we have had, I personally had a seller where somebody made an offer. Let's just say the price was around 190. I think my sales list asking price was 191 or 192. It came in at 175. We countered back at full price and the buyer came all the way up to like 190. And it's like, so there's things going on like that usually don't happen. Negotiations don't typically happen like that. But the reason why it happened like that is because they were the only one on the market. The buyer wanted to buy. There was no other properties on the market that they could buy that was a similar type of unit of what we had listed, and the property sold. So those are good things.
Yeah, the sellers have leverage because there's not much options out there for buyers right now.
Yeah, that's a good thing. So let's talk real quick about mortgages. What's going on in the mortgage industry? From a tightening up standpoint, what are some of the things that you're hearing that the banks and mortgage companies are doing right now?
Yeah, I mean, a couple of things like really interesting happening. Chase Bank increased their minimum requirement of a FICO score, credit score, to a minimum 700.
Yeah,
which is huge because I mean they do a lot of business in the mortgage industry. Now that doesn't mean every single company, every single lender has done that, but it's a start. It's a bold move, and maybe if it does trickle to everybody else, and that's significant. That could take a big chunk of potential buyers out of the market. So that's one news that came out. Another one came out is a couple of banks right now, a couple of major banks are really limiting the amount that some even have completely cut off the amount of home equity lines that they're willing to do on some properties. Right. So one of the big saving graces going into this COVID-19 thing and the possible recession that people are talking about is how much equity people have in their homes. Right. That's been one of the staple that we've been kind of hanging on to, that, hey, this is not going to be a repeat of 2008, because 2008 we were all leveraged. There was so much debt. But the one thing that we keep holding on to is like there's so much equity right now in people's homes across the whole country. So when you start seeing banks doing things like this, it's a little bit makes me nervous a little bit, thinking about it.
Well, so let's break it down and say, okay, well, why would a bank, any bank, why would they increase credit scores at a time we know that we want to do everything we can to get people to continue to do transactions and feed the economy? And the answer to that is simple, at least from my standpoint. It's much more difficult when it comes to the banks and how they have to make their decisions. But just, in a simple way of describing it, as they increase the credit score requirements, then they're decreasing the likelihood of having future defaults on their loans. So they want to have people with higher credit scores right now so they can balance out their portfolio of loans and make sure that they have more quality borrowers in their pipeline to kind of hedge their bet that maybe there will be some defaults in the future. So we got to make sure we put more good stuff into our pipeline and into our portfolio to kind of balance out maybe some of the riskier stuff that we have in the portfolio already. The other thing you talk about, equity lines. One of the things that people did during the last crash is back in 2007 and 2006, 7, 8, and all that time, they were going and getting cash out refinances. So they were going and maybe they bought a property for $200,000. It increased to $300,000. So they went and says, hey, let me go refinance and pull out $75,000. So they pulled out $75,000, which then meant now they don't have much equity anymore. They have their equity, they turned it into cash, and they have their and now they have a high loan balance within their property. Well, then they went and spent that cash on a new car, on updates on their property, maybe children's education, and then the market dropped. And when the market dropped, then the property's value was less than the mortgage balance. And that's what triggered a lot of short sales and foreclosures. So one of the reasons why banks may not want to do cash out refinances right now is because they want to make sure that people have plenty of equity in their properties. Don't pull that equity out and spend it somewhere, and then all of a sudden, if the market goes down, we find ourselves upside down again on our mortgages. So this would be a way to prevent people from making those same mistakes, which again, it protects the bank from having higher default ratios. So there's a lot of people out there, Abe, that are probably like, well, I could really use a cash out, refinance right now. And there's probably a good argument for that. But the reason why the banks are a little bit more hesitant is because they feel like there could be some problems in the horizon, and they want to make sure that the impact on our overall economy and their financial status as a bank is minimized.
Yeah,
So I'm sure there's a lot of politics involved, and I don't know about that and can't get into that. But there is some logic in it, even though we may want to do some things right now that the banks won't allow us to do. I think they have some logical positions and explanations for it.
Yeah, absolutely. And the part that concerns me is, what are they seeing down the road to make these moves, right? What are they predicting? Are they thinking a deep recession? Are they thinking what's going to happen in 6 to 12 months?
Yeah.
So that kind of concerns me a little bit. Now, everything we're looking at in our market looks like a strong real estate market. It should be a good bounce back, especially for single family homes. But when you see actions like that from these guys, I mean, they know, they kind of have a little bit of foresight about what's going to happen with the economy. So that gets me a little bit concerning. So me, if I was a seller, I would be capitalizing on that right now. And if you were thinking of selling in the next, say, 6 to 12 months, I'd probably move that up a little bit and get on the market sooner rather than later, just in case the market does go down. Again, we're not seeing anything to indicate that, but it's better to be safe than sorry, I would think.
Yeah, before we get to the numbers, I want to, maybe share this too. Mm-hmm. There's economists and professionals that really study the market. There's indicators that when we see them, they tell us the likelihood of a market going in a certain direction. Okay. Now I'm being very careful with the way that I explain this, because it's a likelihood. It's not a definite. It's just saying that when these things occur, then it usually means the market's going to go in this direction, or when these things occur, the market's going to go in that direction. The key is you never really know if you're right until after the fact, right? We can look in the rearview mirror and say, oh, I predicted that. It's hard to predict the future, but it's easy to look backwards and say, oh, I was right or I was wrong. But when it comes to indicators, there's two types of indicators. There's leading indicators and there's lagging indicators. A lagging indicator, if we look at lagging indicators right now, when we say, how many sales have there been in the last month in this building, and what were those prices? What we're doing is we're looking backwards and saying 3 sales in this community, average price $200,000. So we could then say, okay, well then our property's worth $200,000. Okay, if we use that information, that is past history type of information. It's lagging. It's in the past. A leading indicator could be this. A leading indicator could be the new construction developers are now adding commission bonuses for all the agents and $10,000 in increased closing costs. Look, if you're a buyer right now and you're looking for a residential home, I can take you to a newly constructed community. They'll give you $10,000 off your closing cost. They'll pay the real estate agent a little bit extra money just to bring you over there. So like going from 3% to 5% commission paid to an agent that's a 2% increase. That could be on a $200,000 property. That's $4,000. So they'll pay $4,000 more in commission if the agent brings you over there, and they'll pay you $10,000 more in your closing costs. They're actually paying $14,000 more in costs just to get you to buy their property. That to me is a leading indicator saying, I don't know exactly what it means, but they wouldn't be doing that if their product was flying off the shelf right now. Right. Then you got mortgage companies out there saying no more refinances or cash out refinances. That's a leading indicator that maybe they see something in the future. You got tightening of credit. That's a leading indicator. So what we have to do as property owners, if we're thinking about doing something, you have to look at the leading indicators. You have to look at the lagging indicators. You have to then come to your own conclusion as to what that means to determine, do you want to continue hanging out right now thinking the market's going to go up, or do you want to take advantage of the market right now because you think that the market could go down in the future? We can't predict the future, but those are the things you look at: leading indicators and lagging indicators. And I know you and I do that with our clients all the time. Absolutely. Is we at least present that, and then we have logical conversations about what's the best strategy based on that information, plus the needs and desires of the client at that time.
Absolutely. All right, well, great stuff. Let's dive into the numbers, I guess, because I think a lot of people want to know where we are, have April finished, because April numbers are out. So let's, I'm going to share my screen real quick. Okay. So what we're looking at here, this is for the month of April. So the April numbers are out, and this is single family homes across the board. So this includes both new construction and resales. And if you look for the month, there were 711 closed sales. So these are actual sales that were already in the pipeline. They were already pending, and they actually closed in the month of April. So that number, 711, is down 7.8% from the previous year. Right, considering what we've been through in April in the last 6 weeks, that's, in my opinion, that's a very strong number. The rest of the country, I think most markets have been hit harder than that. For us being down 7.8% in the single family home area is pretty minor. Now let's break it down a little bit further though. Let's look at previously owned. If you look at resales, they were down 14% for the month of April. Okay, and if you look at new construction, look at that, right? They were up 4.7%.
Yep.
So new construction homes actually sold more this April than they sold last April. Okay, and I'd love to get your opinion on that. I'll tell you what I'm thinking. So a couple of things. Number one, with COVID-19 and the fear of coronavirus, it's been difficult to get people to go into homes that are occupied, right? Yeah. So new construction, you don't have that problem. Number two, the inventory for new construction homes right now is at such a high level. And then also with their incentive that they're giving out, a lot of people were flocking to that, and we're buying new construction homes through the month of April at a much stronger rate than resales. So 54% of every single sale for the month of April was a new construction relative to a resale. What are your thoughts there?
Yeah. First of all, I agree with your analysis, and what I would add to that, Abe, is that a lot of owners make the mistake and they look at their property's value, and let's just say again, I'm using a number, 200,000, and they say, well, I'm priced at 200,000, but the new construction, they're at 225,000. But see, what a lot of people don't understand is, as developments, they never like to reduce their price, but they're more than willing to reduce the cost for the buyer. So let me tell you the difference between an advertised price for a new home and the average cost for a new home. So if the advertised price is 225, they never move that, because they don't want the 5 people they just sold a home to in the last 2 weeks to come back into the sales office and say, oh my gosh, we just paid you 225. Now you reduced it to 210,000. That causes an uproar inside of the new development, right? So what they do is they keep the advertised price the same, but when a buyer goes into the new development, then they offer them, we'll give you $5,000 for upgrade allowance, we'll give you $10,000 in closing costs, and we'll go ahead and pay your attorney's fee and the appraisal fee. Next thing you know, you take all of those costs, that might be $17,000. So the 225 advertised price that we see out there might be significantly less than $225,000. It could be $215,000, could be $213,000, and all of a sudden, people are wondering, why are people paying more for new construction when they could buy my house? They may not be paying more.
Right.
There's a perception out there that they are. So that is one of the things that's going on. And builders really jumped on this really fast. They must have anticipated there would be a slowdown. They looked at the inventory levels and figured out their inventories were a little higher than they were comfortable with, considering the economic position and health positions we are in the country. And they decided they were going to lower the cost, that it was going to lower the amount that an agent or a buyer was going to have to pay for the property, but not lower the price tag.
Right. It doesn't cheapen their product, but they get more sales.
Yeah, and again, this is really critical for real estate agents to be able to explain this to a client, because you could be looking at things that are really that the perception is one thing, but the reality is another thing, and then you sit there and wonder, why in the world am I not selling?
Absolutely.
That's the reason.
All right. Well, let's look at, so the next leading indicator, right, that's gonna trickle into next month is pendings. So now look at what happened to pendings. So we're down 22.2% in pendings. So 692 properties, homes. This is both new construction and resale pending. So that is going to lead into May. So we should see numbers down in the month of May as well for closings. Right. So down 22%. Look at resale. Here's a big number there. So down 31%. And again, that goes back to a lot of people did not want to go into homes that are occupied. That hence the big 30% drop in pendings in resales. And then look at the new construction, they were down 6.8%. So towards the later in the month, less and less people were looking even for new construction. So overall, down 22% as far as pendings. But here's one thing I want to look at that's really interesting. Look at the month supply. So right now, when we look at single family homes in the market, we're at a 4.8 month supply. So that means if we had no more inventory hit the market, in 4.8 months, we would sell out of every single home on the market. Anything below a 6, Greg, is considered a seller's market. Anything above a 6 becomes a buyer's market. 6 is the borderline for a neutral market, pretty much.
Yep.
But check this out. So look at this number. I mean, I haven't seen 4.4 in a very, very long time. So this is resales, right? You alluded to how low inventory is right now for resales. It's down 20%. So we only have a 4.4 month supply of inventory for resale homes.
Yeah.
We have to go all the way back. God, we got to go way back. So all the way to December of 2007, we were at 4.2. And ever since then, we haven't seen anywhere near that. And now we're back at that level. And when we look at new construction inventory was actually is up. You got a 5.4 month supply. So I think that's what the builders are feeling. They're feeling like, okay, we've got all this inventory out there. The market is slow. Who knows whether we're going to go into a deep recession or not? And that's why I think they're doing the incentives right now to get people to get rid of some of this inventory. Yeah, and that's what they're doing.
Yeah. Yeah. So, again, if I would tell anybody that listens to this, that if you're thinking about selling, at the end of the day, let's take emotion aside and just look at it from an investment standpoint. And I know people's homes are their homes and they're their castles, and it's where they raise their families. So it's not just an investment. But if we just set some of the emotions aside for a moment and look at the financials, there's no question that anything that you're going to sell, a home, a condo, a bike, a car, a boat, anything you sell, you're going to get the most money for the item when supply is low and demand is still there. And what we saw is the absorption rate, where there's 4.8 months of supply, that's what it was. And now it's 4.4 months of supply. Even though you think that's really small of movement, it's telling you that the market is still trending for residential homes. It's still trending to be a strong seller's market. Now, what we don't know is when we get through some of this COVID-19, are there a bunch of properties that sellers want to sell that when they feel more comfortable showing the property, they're going to then dump them on the market? And then all of a sudden we could see, better sellers market, stronger sellers market. And then all of a sudden we could see now more inventory coming on. And then as more inventory comes on, we start moving more towards either a neutral market or we flip over into a buyer's market. Again, don't have a crystal ball,
Right.
but we want to equip you with the information like this so you can make sound decisions for yourself if you're thinking about either buying or selling.
That's a great point. So that's a number I'm looking at every single day, and you and I in communication at that. So the same way that there's pent up demand right now on the buyer side, that they're waiting for things to open up, there's some pent up demand on the seller side. We just don't know how bad it is. Because there's a lot of people that are waiting, don't want to sell don't want to show their home right now during this crisis. So we don't know how big that pool is. And we'll see when things start to clear up a little bit and how much inventory goes up at that point. But ideally right now, 4.4 months supply is like insane. Definitely a seller's market. All right, let's jump over to condos real quick and let's see what that looks like. So when we look at the condo market, let me switch over real quick to condos. Okay, closed sales. So now here, I mean, this has been significantly different, right? As far as condos, and we're going to talk a little bit about oceanfront condos specifically here in a little bit. But look at the closed sales for the month of April, down 41.6%. So only 341 closed sales for the month of April. We're not going to dive into new construction and resales because there really is not a whole lot of new construction on condos. So let's just go straight to pendings. Now look at this number. So that means down 54.7%, the number of pendings, only 273 pendings in the whole month of April. So when it comes to May, we're going to see significantly low number as far as closed sales. And then let's look at inventory, up 9.3%. We're almost at a neutral market. So we've been in a seller's market for a very long time right now. All the way since right there, since July of 2017. We dipped into a seller's market, and it's been in that range this whole time. And now, for the first time, I think the next time these numbers come out, we're going to dive into a neutral market. If not, it's already neutral, 5.96. I mean, to me, it's a neutral market at this point. It might go into a buyer's market soon. So that's concerning right there.
That's that's really big news. And again, everybody who listens to this has to determine, okay, what does this mean for them? Beyond the data, it's like, okay, do you take action on this data? The likelihood is that we're going to continue to see inventory rise in the condo market, which then flips it into a buyer's market. Now, the challenge right now is that we're having one of those interesting years where we don't know exactly what the rental income is going to look like, right? So you got condo owners that have some stresses right now. That rental income's likely going to be significantly less at the end of the year. Their net numbers are probably going to be a lot less and could turn into some negative numbers when it comes to holding cost of these condos. At the same time, that buyers are looking at that information and they're saying, hey, I don't know if I can pay that price anymore since that's the type of rental income. Now, as a seller, you don't want to hear that, but you got to understand the buyers have their own perception of what's going on. Sellers like to look, by the way, at past sales. And buyers like to look at what they feel is going to be in the future for them because they're going to hold it into the future. They're going to own it in the future. So they like to see what's the future look like to determine what they're going to pay for a property. The seller is not going to own it in the future. So the seller doesn't care about the future. They like to just judge the past and come up with a logical price based on past data. So there's a difference, right? Buyers are looking through one angle and sellers are looking at a different angle. The thing is we're starting to see right now that there could be a shift moving into a buyer's market. Now, it doesn't happen overnight. It's not gonna, it's like, don't go out and have to do something tomorrow because we say that there is something looming in the future, but it's just important that you know this because if I was an owner of a condo and I thought, I think I'm going to sell it sometimes towards the end of the year. If I said that, I would not be waiting to the end of the year, because the chances are that the inventory is going to pass that 6-month absorption rate, go significantly further than that, and that's going to then influence pricing. So if somebody wanted to sell, the time that you sell and maximize your price is when you're in the neutral, or and you're at 6 or below 6 months of absorption. So that's what I want people to take from this.
Yeah, and let me add to that as well. I mean, for the people that are thinking, yeah, let me wait till after the summer, that's usually an argument people give you with rental properties, because you get a significant amount of rental income between now and end of August, right?
Yeah.
But with this year, it's going to be different, right? We're not expecting anywhere near what a normal rental season is going to be, right? Most people out there are thinking if we get 40% of a normal year, are going to be happy with that. So you don't have that that carrot to hold on to, that, okay, well, let me get these rental income these next 4 months and then sell at that point. So yeah, I mean, absolutely. Like right now, I would move up my my timeline to a little bit closer to where we are now. And oceanfront condos, I looked at this number yesterday. There's 1,419, I think 1,400 and change on the market right now. They're either oceanfront or ocean view buildings of condos for sale. Only 139 or 137 were under contract. It was like 9%, which is insane. But when you look at what's happening, I mean, you can imagine nobody wants to buy a condo right now not knowing what the rental season is going to look like, but it kind of shows you.
But what is that compared to? So 9 to 10% are under contract, but in a normal market, isn't that number around 20, a little bit over 20, or somewhere around 20%?
It is. When we look at the overall condo market, typically 28%, roughly anywhere from 26 to 29% of what's on the market usually is under contract, right? Yeah, so a little bit over a quarter. And then right now, when we look at the overall condo market, we're somewhere around 18 or 19%. So about a third drop. But that weighs all condos. When you break down oceanfront specifically, it's even uglier to look at. Yeah.
So that number is why we're starting to see the months of supply creeping up.
Right.
It's not because it's not a supply issue that's turning that number. It's a demand issue that's turning that number up.
Right.
So we're collecting supply as the demand has decreased a little bit.
Right. Okay. So I'm pretty optimistic on our single family home, and I've said this a few times in other videos. I'm pretty optimistic on single family homes. Yeah. Obviously, we can't predict the future, but there's still a lot of demand in this area for homes. There's a lot of people still moving here, relocating in this market. I think we're going to be okay. I'm not so optimistic on the condo market. I mean, I hope I'm wrong. I hope it turns around and things are good, but I'm a little bit concerned about the condos. Going forward, but we'll see how the next couple of weeks play out.
Yeah. All right, Abe. Well, I think this is another great update that we're sharing with our audience. Any last final words before we?
No, I think I'm good. You?
Okay. Well, please, tune into this. We're going to be doing this every week. Right now, we have it on schedule for Wednesdays at 11 a.m. Eastern time that we go live. Of course, you can see on the Myrtle Beach Real Estate TV Facebook page, these recordings will always be there. We're also creating a lot of additional content that we're putting on Myrtle Beach Real Estate TV videos out there. And we have a YouTube channel, of course, Myrtle Beach Real Estate TV, where we're breaking down the real estate transactions, sharing with you, all the ins and outs of all aspects of real estate. Whether it be what kind of updates should you do, what updates should you not do before selling, what additions can you or updates can you make to your home to increase the price that you get for your home. From a marketing standpoint, details on contracts, should you get a home warranty, should you get an inspection, all of those things we're creating video content and we're placing them on this YouTube channel as well as Facebook page. So please pay attention, subscribe to the YouTube channel so you can get updates of or notifications whenever we do produce additional content. Abe, once again, great job and thank you so much.
Absolutely. Have a wonderful day. Take care, guys.